everybody, this is Jason Ostrowski, and welcome to another episode of the Everything Real Estate Podcast. I feel as though we're punching a little above our weight in today's episode. I am really excited to have Danielle Hale, Chief Economist at Realtor.com, as my guest on the podcast this week. And if you ever wanted clarity in the chaos of the housing market that is 2025, this is a conversation that I think you'll want to hear. Danielle's been leading economic research at Realtor.com since 2017, and before that, she spent nearly a decade as managing director on housing research at the National Association of Realtors. Today's episode is titled "The Housing Market is Everything Everywhere All at Once," because frankly, that's what it feels like right now between interest rates, inventory, inflation, buyer demand, economic signals, you name it. It's all happening at once. But don't worry, Danielle's here to help us cut through the noise and make sense of the moment. So let's jump right into today's conversation with my guest, economist Danielle Hale. My guest today is here to help us make some sense out of what's currently happening out there in the real estate market. She is the chief economist for Realtor.com. Her name is Danielle Hale. Danielle, I'm really happy to have you on the podcast with us today. How are you?
I'm great. Thanks for having me, Jay. It's good to be here.
Yeah, thank you. And I know this is your first time on the podcast. We met extremely briefly in Philadelphia earlier this year. I'm just glad that we could finally make this happen together, and I appreciate your time. So I'm going to hop right into things because I have a lot of questions for you today. So first question. Overall, the story of the 2025 housing market so far is what, in your opinion?
I think the phrase that comes to mind when we think about the 2025 housing market is failure to launch.
Oh my God, that's great. Yeah.
I will say our forecast for 2025 was not, especially optimistic. We expected a really modest growth in home sales, under 2%. Relative to 2024, which is, I'm sure your agents know in your area, one of the worst years in the last 30 or so for the existing home sale market. The new home sale market is actually kind of a different animal right now, but focusing on the existing market, 2024 was tough. We expected 2025 to be a little bit better. Our forecast was actually among the more pessimistic. So I think we haven't had as bad of a year from a forecast perspective because we weren't as optimistic going into the year, but I think that's still a tough spot for agents to be in. It is still a challenging year after, what have been a couple of really challenging years. So, I think fortunately this business attracts a lot of people who are optimistic. And I do think things are starting to get better, but I think it's just going to be a slow climb because of some of the background context that I'm sure we're going to talk about.
Yeah, absolutely. And I know, and like you said, not to make Realtor.com very pessimistic overall, but I do think you're right. I mean, after last year, we want to see modest growth in the market. We want to see a bounce back. But sometimes, these things take time to happen, and our best forecast sometimes gets a little extended. So with that, what do you see the second half of 2025 looking like? And are you seeing any signs out there of stabilization? Are you seeing further cooling, a potential rebound? What are you seeing shaping up for the rest of 2025?
Yeah, so I think the policy uncertainty that consumers and businesses are kind of living through right now is, it's hard to measure these sorts of things, but I think it's fair to say it's pretty unprecedented. The new administration came in January. They are moving fast. They are doing things that I did not think they could get done as quickly as they're getting them done. Which some of the things that they're doing, will have some benefits. The bill that's working its way through Congress right now does include an extension of tax cuts. Is I think really important to consumers and businesses. So getting that done, and I did not expect them to get it done by mid-year. I thought it was going to be like a 11th hour, as we typically see with these kind of tax packages. Sometimes they don't get finalized until we're already in the tax year that they applied to. So getting that done will be, I think, important and give people some certainty. But in this early period where they're still rolling out a lot of these policy changes, I think it makes it hard for consumers to know what to expect and businesses to know what to expect. And so I think that's playing a role in some of the hesitancy that we see right now. And you think about buying a home, it's something that you're doing not just for today, but in most cases, it's a 30-year commitment. You're expecting to pay back a mortgage over 30 years. And so I think when there is an environment of uncertainty, it's hard to make a big commitment like that. But as some of these policy uncertainties get nailed down, I think it'll be easier for people to go ahead and move forward and have some confidence that they can uphold a commitment like that over a long period of time.
Yeah, you talk about confidence. I mean, let's talk about some of that consumer confidence. How would you describe what consumers are feeling out there right now? You're much more on the pulse of this than I am. I can speak locally, but we were talking off camera just for a couple minutes about I just feel like people are a little irritable out there, a little crabby. To put it mildly, how would you characterize consumer confidence right now?
Yes, it's something that we've seen it's not just unique to this year, past couple of years. People often say that they don't feel great about the economy, the direction it's going, their job security, all of these big macro indicators. In recent data, they've also expressed some concern about their personal financial situation. That's not always the case, but that has been popping up recently. But what's interesting is that the spending data, for the most part, all of the hard metrics where we're looking at actual data have come in really well. So there is a little bit of a disconnect. People are maybe feeling anxious or nervous about the economy, but many of them are still spending. And fortunately, the economy doesn't run on what people are feeling. It runs on what they actually do. So far, at least, the data has held up relatively well. Unemployment is still low. Wages are still growing. So the foundations still look pretty solid, which is really important for the housing market because obviously it's people with jobs and income that are making those mortgage payments or making those rent payments. And so far, that data has held up really well.
I do find what you do fascinating because I feel like, you have your hard statistics, but it's almost like having an appraisal, right? It's a mix of art and science. And I feel like the art part of your job is like trying to figure out why people feel the way that they do when the hard data, like you said, there is this disconnect. And I do feel like there's this sense of anxiety, at least out there, that I can feel from buyers as, interest rates are what they are. Do buyers wait? Do they sit on the sidelines? Do they do something? You had mentioned the administration and some of their policies, and so there's kind of anxiousness with that going on. So let's just talk. I want to touch upon probably the most boring subject for someone outside of real estate, and that is interest rates. So let's touch upon that because I have a theory, and I said it to you earlier when we were off camera that 7% mark, at least where I am, I feel like is kind of like that towing that line right now where rates are right around 7. They go a little bit above 7. People want to pull back. They go below 7. People are more prone to jump in the market. What are you seeing out there in terms of interest rates and having, an impact on buyer demand or inventory for that matter, because, you have sellers that are locked into their interest rates. They want to move, but they don't want to give up that rate, that locked in effect. What are you seeing out there regarding interest rates?
Yeah, so we take a look at data that's put out by the FHFA, the Federal Housing Finance Agency, on the rates that people have on their mortgages outstanding. And right now, it's over 80% of people who have a mortgage that's outstanding are paying a rate that's under 6%. So to really unlock a significant chunk of homeowners, you got to see rates go below 6%. But I think your observation is a good one. Like every little decline in rates is going to unlock someone. So the lower rates go, the more you see an effect. In September of 2024, we saw rates drift into the 6.1% range. And then a couple months later, we saw existing home sales data pick up. We had a pretty decent December, January, February period for home sales. And so, I think it's fair to say that if we get close to that 6% margin, you do have a very different housing market than you do where we are now, which is much closer to 7%. A lot of people were optimistic heading into the spring season because we did see those lower rates in September. And then obviously we started to see them climb. And I think seasonally, a lot of people are making plans for the year ahead in that late fall, kind of New Year's period, thinking about what you're going to do in the next year and then acting on them as we go later into the year. So, interest rates are really important there. As I mentioned, 80% are over 6% and more than 50% are under 5%. So mortgage rates, we're still going to be talking about the mortgage rate lock-in effect for a while. That doesn't mean we're not going to ever see sales. We've seen sales hover right around this 4 million range for a couple of years now. I mean, that seems to be sort of a floor for the housing market because life's going to happen. People need to move for jobs, family changes, retirements, that sort of thing. It's also the case that not every homeowner has a mortgage. And so not everyone is sort of tied into their mortgage rate. You've got first-time buyers who probably are going to take on a mortgage, but don't have that lock-in effect. And then you've also got people who have paid off their mortgage. So older boomers who may own their homes outright. And actually, when you look at the data, we see that there are more free and clear homeowners who own their home without a mortgage now than we've ever seen before. So that's another reason why we continue to see sales chug along, if not, necessarily where we'd like them to be. They are still continuing on. But mortgage rates are going to be important, especially because they were so low before this recent episode. So a lot of people, and good for those people, right? They either bought a home with a low rate or they were able to refinance. It has made their budget look a lot better because they've reduced their housing costs. But it does mean they've probably got a much higher bar for making a move. If you have another kid, maybe you find a way to like double up and share a bedroom rather than moving, or maybe you look into remodeling to add a room because then you're only borrowing at a higher rate for the money that you need to make the remodel, and you can keep your low rate. But so I think mortgage rates are going to be a factor for the housing market for a long time, and I think we're going to see them come down pretty gradually, which is one of the reasons we expect it to be kind of a slow recovery period from a sales perspective.
I think you bring up my next question for me, because we always talk about, okay, what can we do? What can we do to unlock some of these things? But some of these things just may be baked in and take time to recover to where we want to be in terms of sales. So we know we need to build more. I mean, that's obviously been the case for several years now. But what other long-term solutions do you see as an economist, if anything, to help satisfy the supply issue in the years ahead? Because that's not an easy question to answer. But are there steps that we can take? You had mentioned, I have several clients that are looking to put an addition on, like you had mentioned, their home rather than selling at this point. What are some other solutions that you see out there, maybe some creative solutions that people are doing?
Yeah, so you're right. We do need to build more. And at Realtor.com, we have a campaign that we call Let America Build. My team does the research that's sort of foundational for setting the context and understanding what the problem is, where it's better or worse, and what we can do to kind of address it. And then we've got a really great marketing team that takes that message and pushes it out in consumer ads, making sure that agents are aware, making sure that agents have assets that they can share, because we know that agents are really active policymakers, have in their local community, active with policymakers, often also at the state and federal level. So we've got a whole bunch of assets that people can take and even customize and use if they want to share the message about how we need to have more building. Building is probably the best way to solve this challenge. But you can also get creative, and we do see a lot of homeowners getting creative, maybe in some cases co-buying with family or friends. So they're not, trying to have their own home, but trying to get into home ownership in a shared way. So multi-generational housing. You do see some communities moving to make it easier to build accessory dwelling units. Or, where I live, I'm in a DC suburb. They're trying to make it easier to build, say, duplexes and townhomes where it used to be zoned for single family. Those types of things all help move the needle. But I think really we have such a big problem. Our estimate suggests that we are 4 million homes undersupplied nationwide. It's actually worse in the Northeast region, where you've got an older housing stock. The housing has been there for a long time. There isn't as much available land, so it's not as easy to just build. And then also, in some cases, regulations kind of make it harder to build as well. So the Northeast is really far behind. But nationwide, to address that 4 million home gap, given that we're building somewhere between 1 and 1.4 million homes, we estimate it would take like 7.5 years. It's going to take a lot longer in the Northeast. So I think raising awareness and making sure that we are doing what we can to support home building is really important for the industry.
You are so correct about it is amazing to me. So I'm in Montgomery County, Pennsylvania. I'm right outside of Philadelphia. And there's hardly any land to build on anymore, except if, you get way out there and people are pushing further and further out, which it tends to be always the case when it comes to cities. And then you're pushing further and further out. But some of the places that these builders build, my wife is in the business too. And we kind of laughed. We're like, nobody's ever going to buy that. And then sure enough, somebody always does because we need the housing. But some of these locations are crazy, and in the Northeast in particular, that is obviously very difficult because there is little land left to actually build on. So you bring up a great point with that. So I want to talk further about our regions of the country and touch upon which regions or cities are outperforming or underperforming the national average, because I think it's good for us to have some context about where the Northeast stacks up in comparison to other regions of the country. And are we seeing kind of a uniform market? Are we seeing things jumbled up in certain locations? I always find that what happens out west tends to navigate or migrate east. Do you see that happening? Where are we regionally at this point?
Yeah, that's a good question. So I don't know if we're going to see this trend migrate. So nationwide, we are seeing more homes for sale. Some of this is driven by more sellers coming to market. So the last couple of years, a lot of sellers have been sitting on the sidelines. They're, as we talked about, like the threshold for deciding now is a good time to sell is pretty high right now for a lot of them. So we had seen low new listings activity. We're seeing a decent uptick in new listings activity, although we sort of lost a little bit of momentum in May. So it'll be interesting to see if that continues. But decent uptick in new listings activity, which is pushing active listings higher. We're also seeing slower time on market. So more sellers, what appears to be a bit of buyer hesitation. So those are kind of reinforcing each other and pushing inventories up overall. But that's not, it is happening everywhere, but not to the same degree everywhere. So the biggest increases that we're seeing are in the South and also the West. And those are regions where we've seen a lot of home building. So that is, I think, an important contributor. In our most recent May housing report, we did a nice little correlation between construction over the last few years and inventory growth. And it's a pretty decent correlation between them. Areas that have built more have seen more inventory recovery in those markets. So we're seeing a lot of that in the South. In some markets in the South, actually, the number of homes for sale is back up above pre-pandemic levels, which I see your face. That is not happening in the Northeast. So it looks like you are not seeing that in your market. But so we see some pretty big recovery in the South and also in the West, less so in the Northeast and the Midwest. And it's interesting because the last few years, we've had a housing market that was very much influenced by mortgage rates and so moved very uniformly across regions. But we're seeing more divergence now and a much bigger sort of inventory recovery in the South and West, a little bit slower sales activity. So more softness there. So price growth, not as strong. In some cases, some markets are seeing prices decline in the South and West, relative to recent highs. So, for sellers in those markets are still in a pretty good position, but they may not be getting the same level of pricing that they were able to in the last year or two.
I want to touch upon affordability because you had mentioned, maybe some markets are selling a little bit below where they were before, particularly in the South and the West. Affordability is an issue that I think, to my mind, has been the number one issue for the past several years. In fact, NAR states that the first-time homebuyer age in the U.S. shot up to 38 years old this year, which is just insane to me. So do you see any relief on the horizon for first-time home buyers? I mean, I feel so bad for these people. I love first-time home buyers. I love working with first-time home buyers. They're some of the best clients that you can have because obviously in 10 years they're going to potentially buy again. You get the move-up buyers, but just getting their foot in the door nowadays is so difficult. So where do we stand with first-time home buyers? Are they going to get any relief at any point in time in the near future?
Yeah, it is a really challenging time to be a first-time home buyer because you mentioned prices are high, mortgage rates are high. It's like a double whammy. And of course, when prices are high, you got to have a higher down payment. The good news is, I would say the market is it's less competitive. We've got an investor report that we're working on. I can't remember if it's been released yet or not, so I'm not going to share too many of the details. But
I almost had breaking news on that.
Sorry. If it's not already out, it's coming out soon. And I think it's going to shed some optimism for first-time home buyers with regard to like competing with investors. But it is challenging. This is one of the reasons why we really think it's important to build more homes, because where we see more building, we have more inventory, we have a little bit more price softness, which really helps open the door for those first-time home buyers. Obviously, if mortgage rates were to come down, that would also help. But no, I think it is challenging. And even though it's challenging, though, people still want to do it. So I think, for agents and professionals in the business, it's important to help them take advantage of as many resources as they can because it is such a challenging road. So, they've got things like down payment assistance programs. There are some that are national, some that are regional or local. And so that is an opportunity for them. It's also worth trying to help them with any tips or tricks to lower their mortgage rate. We did some research looking at, what are the characteristics that led to a lower mortgage rate relative to others. Notwithstanding whatever happens in the market, you can't control what the Fed's going to do. You can't control what those interest rates are going to be, but you can adjust your personal situation, right? So you improve your credit score, that can lead to a better mortgage rate. You either raise your down payment by trying to save more, or maybe you lower your home price target, and that can give you a better loan to value ratio, which can improve your mortgage rate. Or you can, grow your income, pay off other debts to improve your debt to income ratio, also going to improve your mortgage rate. But I think the thing I liked most about this research is that the biggest thing you can do to improve your mortgage rate is just shop around for a lender. And that's something that agents are very well positioned to offer that advice for consumers. Now, I know it's hard to shop around, and you got to advise your clients, you got to try to look at the same time because mortgage rates are pretty variable. So it's worth pointing out it's not exactly an easy thing to do, but the potential for savings are very real there. And it's also worth knowing, we talked a little bit about new construction and existing homes. New construction right now, builders are pretty good at offering incentives, often in the form of like a mortgage rate buy down. And so that's another bit of research that we did. We saw that in the last year, buyers of new homes tended to pay 0.5 percentage point less for a mortgage rate than buyers of existing homes. So if that's going to be a difference maker, and you're in an area that has some new construction, it's maybe worth considering, even as a first-time buyer. When I think first-time buyers traditionally have not necessarily gravitated towards new construction, it tends to be at higher price points, but that's not necessarily the case in all areas.
You mentioned the builders. I've seen actually an uptick in seller financing. So, one of my clients right now is offering private financing, at a good interest rate to any potential buyer out there. I think that's a good way to go. If you can, if you're a seller, you can do that. Obviously, that's going to kind of poke the buyers a little bit and maybe get them out to actually see the property and make an offer. I want to switch things up real quick because I know, you and I are having this conversation. You've had this conversation probably with like a million people nationwide, day in and day out. This is what you do like ad nauseum. So I just want to ask you, like, what is the best part of your job at Realtor.com? Like, what do you love about your job? Because I know I love doing the podcast, but like there are certain things, if I go to a listing appointment every day and I'm saying the same things over and over again every day, I think I would go insane. So what is the best part of your job?
I mean, I just love that I have the privilege of helping people understand something that matters so much. And I'm not like walking through people through a transaction on the ground the way that an agent is, but I'm helping provide the context for those agents so that they can be a better guide to consumers and, for consumers. That is a privilege that I really love to be able to do, because I do think homeownership it's a huge opportunity for people. And it is hard and complex, but it's not that hard and complex. Like, people, if they're given the right guidance, I think can do it. We see the homeownership rate is really high in this country. It's hard for that younger generation, but they're optimistic, and I want to see them succeed. So I love that, and getting the chance to try to take these complex concepts and complex process and simplify it down to like, here's what you really need to know and here's what matters to you, is something I really love.
That's a great unrehearsed answer, I do have to say. What's the worst part of your job?
The worst part. Oh, that's a
I don't want to put you on the spot.
I spend a lot of time on camera, and I'm vain enough that I'm like, gotta do my makeup today.
Well, some people, everybody always asks me, like, is this going to be like a casual thing? Can I like come on in like sweatpants? I'm like, you can do whatever you want. Like we tend to not use the video that much, but I totally get it. I've had people get angry at me if we're gonna put this on video. So like, I totally understand any portion of what you do. So, all right. So if you had to describe the housing market as one of these common realtor emotions, how would you best describe it right now? Would it be A, neurotic, B, irritable, C, manic, or D, confused? Or I should say E, optimistic.
Right now, what is the best word for right now? I don't know if... I would say it's kind of, maybe it's not quite confused. I think it's maybe frustrated, actually, which I'm sure is emotion.
Yes, that's absolutely a real emotion for sure. All right, so F, frustrated.
Yeah, because I think there are people who would like to make a move but are finding it really challenging, and so I think frustrated is probably the right word. But the sort of the optimistic side of frustrated is, I think there is that pent-up demand. So when we do see mortgage rates come down a little bit, maybe pricing come down a little bit, affordability has been at a level where, it's been beyond the realm of what is historically normal for quite some time. So the fact that the housing market has held up as well as it has, given how hard it is to afford a home right now, I think is impressive. And I think a testament to the fact that people do really want to get into the housing market. It's just a matter of trying to fight against these really challenging external conditions.
We've become so spoiled since the pandemic. Like, you get in these grooves where you think like everything is just going to remain the same forever. And it isn't. We're due for a correction. I don't know if you would call this a correction or not. But obviously there's been some changes and things are going to continue to change. That's just the bottom line. And so, are there economic indicators that you're closely watching right now that real estate professionals should be paying attention to? So things like job growth, wage trends, consumer confidence, the bond market. Like, is there one indicator that sticks out to you when it comes to predicting what's going to happen in the housing market?
Yeah, historically, I would have said job growth, though it's not like an immediate thing. Like usually you see the economy add jobs, and then a year or so later, that kind of like translates into a housing market pickup, which makes sense. Like usually, you've got to demonstrate some income history in order to buy a house. We did see that kind of break a little bit during the pandemic, obviously, because we had this major unemployment disruption, but then we had sales really take off. So it did kind of break down a little bit then, but I still think it's an important indicator. In addition to those hard data indicators, we do pay attention to softer indicators like consumer confidence, and that sort of thing. And also in today's market for the real estate market, home builder confidence, because building is so important and makes such a difference across the different parts of the country. As far as real estate data goes, the thing that I watch most closely is that new listings measure, because we've been in such a low inventory environment in most of the country for so long that is really the most important sign, because you can't buy what's not for sale. And so seeing how many of those listings are coming to the market is a really important thing that we track. I think is the best indicator of how sellers are feeling about the market. And then of course, a lot of those sellers are buyers. Sometimes people are selling just in a one-way transaction, but very often they're selling and buying another place. So that's an indicator I like to watch.
What do you think about the possibility of a recession? Earlier this year, some of the tariff stuff, they were talking about the possibility of a recession. Do you think that that has subsided? Do you think that's still a distinct possibility? And what would that mean for the housing market?
Yeah, I mean, I think relative to the original tariff proposal, we have seen some walk back. And so that, we're in a better position than we were. That said, I still think those tariff questions are not totally resolved. And, it does seem that we are going to be in an environment where tariffs are higher, and higher tariffs tend to restrict trade and make goods more expensive, whether we're importing them from abroad or even domestically. If domestic producers don't have to compete with foreign producers in the same way, that gives them a little more cushion to push prices. So I do think we're going to see prices go up, and we're probably going to see growth slow. Will it slow enough to cause a recession? I don't think so, but there's definitely a non-zero chance that we could see a recession. What's interesting, we have kind of a tracker on our site that's kind of always on, where we ask consumers how they're feeling about the economy. Are they expecting a recession? And we did see an uptick in the first quarter of the share of consumers that are expecting a recession. Now, it's not as high as it was during the COVID pandemic, or even during 2022 when the Fed was hiking interest rates. So that just because we see this uptick doesn't necessarily mean we will have a recession. Sometimes consumers are wrong. But to your point earlier about consumer psychology, we do see consumers maybe being a little bit more cautious because they are worried. But the other interesting thing is that when we ask consumers, about a recession, and then we ask them how a recession would change their home shopping behavior, and interestingly, they're twice as likely to say that they would be more likely to buy a home than less likely to buy a home. So, obviously, in a recession, not everyone sees their job go away, right? So some people, if they can stay employed, look to a recession as an opportunity. I think they might expect to see home prices fall, potentially interest rates fall. And, for a lot of home shoppers, that's sort of the break that they're looking for. Now, it is the case that some people will be less likely to buy a home. So I'm not saying that a recession will be good for the housing market, but a recession will be good for some people who want to be buyers and just don't feel like they've gotten a chance yet.
Looking ahead, and I know this is speculative at this point, but and maybe it's too early for a forecast for 26, but what are you kind of hoping to see take place in 26 and beyond? Are there some long-term shifts that you expect happening in the market, or not? Maybe, but what do you think is going to happen in the near term in the next couple of years?
Yeah. So, as we talked about earlier, my expectation, until something sort of shifts to prove me wrong here, I do think it's going to be a slow recovery. We are fairly far below what I would say a normal rate of home sales are, but I don't think we're going to see a quick snapback just because structurally, we have so many people that are anchored to low rates. And so I think it's going to be a more gradual thing that happens. And we talked about affordability really being stretched right now. So, the costs are really high relative to incomes. There are three ways you can work through that affordability challenge. You can either see home prices fall. That would not be my preferred way of seeing an adjustment, though we are seeing prices soften in some markets. So some of that is going to happen. You can see mortgage rates come down. That would be really nice to see. Again, I think that's going to be a more sort of gradual adjustment. And there's no way we're getting back to 3% mortgages, that we saw during the pandemic. But I think, high fives is probably something that is within the realm of possibility. The third thing you can see is income growth. And we have seen a lot of income growth. I think that alone is not going to be enough to solve the affordability situation. But I think each of those factors is going to play a role to really help revive the housing market, bring those affordability metrics back closer in line with what has been historically normal, and open up possibilities for buyers that feel like they haven't had them yet.
All right. So I want to, before we get out of here, I got a couple questions for you. All right. So doing what you do, who do you look up to as an economist? All right. Who is an economist, right? And who are you starstruck by in your line of work? Is there anybody that you're like, oh my God, it's so and so, right? And follow-up question to that. Do you by chance have a poster of Alan Greenspan on your wall somewhere?
I don't, but I don't know if you can see in the background. It might be cut out of the frame. In a previous job, I worked for a think tank and worked with a gentleman by the name of Dr. Alan Meltzer, who wrote a book that was modestly titled A History of the Fed, but it really should be The History of the Fed. It's a really comprehensive history. So I do follow the Fed. I like the Fed. Chairman Powell right now is actually not a trained economist. He's a lawyer. But I am impressed. I'm really impressed with what he's done. It has been a challenging situation to navigate the whiplash the economy has been through with the pandemic and supply chain shortages and a lot of fiscal stimulus during the pandemic. And has he made every call perfectly? No, but no one can predict the future. And I think I've been impressed with his ability to adjust when he needs to adjust. And I think a lot of that, this is an external observer, right? But it seems to me that he is very humble at, what we know, what we think is true. And he's always willing to go back to the data and adjust where he needs to. He also, I think, does a really great job of communicating what he's doing and why, which is hard to do when you're operating with so much uncertainty about what's ahead. So I'm really impressed by him. I know he's got a hard job too. It is not easy to be responsible for basically a foundational interest rate for the economy, but I think he's done a really great job of it.
You bring up a good point, because I always think like being an umpire or a referee is a very thankless job. I can't think of a more thankless job than that.
He's like the economy's referee. That's a great analogy.
I would never want that job. Not in a million years. You couldn't pay me enough to do it. No way. So, all right. So you're an economist, but having worked at NAR and Realtor.com, who then is the best real estate mind that you've been around?
Ooh, that is a great question. So I did work at NAR for almost 10 years and worked with Lawrence, and a lot of you spend 10 years working alongside someone. A lot of how you think is shaped by them. So Lawrence Yun has rubbed off a lot on me. I'd like to think I rubbed off a little bit on him too, maybe. But yeah, he's got a great team there. I've got a great team at Realtor.com as well. So a lot of people that have been with me for a while now. And so I think the most important thing when you're studying the housing market is to be curious, because the macro context keeps changing, the industry context keeps changing. And so I think you've got to stay curious because you can't get too comfortable. I sometimes would joke that the housing market moves slowly, and it does, but recently it seems like it's moving a little bit faster. So we've had to stay nimble.
That's a great answer because I will tell you, I look forward every year to Buffini's bold predictions when he has Dr. Yoon on. And so always make sure to watch that. I'm a real estate nerd at heart, so I love that kind of stuff. So that's a great answer. All right. So very last question to you. You obviously travel a lot for your job. And you know the country pretty well, I would assume, at this point. So if you had to get stranded in one U.S. city, outside of Philadelphia, of course, for a long layover, let's say a few days, what city would that be and why?
Okay, so a few days. So I'm not stuck in the airport. This is not a question about
No.
airport.
You're like, there's no way you're getting out of this city. I don't know. You could even make it a week if you want to do that. However long you want to make it, let's say a couple days to a week. Where are you getting stranded?
It would probably be, we're approaching summer, and I like the beach. So I mean, not that you would ever actually get stranded here because you don't like transit through here. But I'd probably say like Charleston, South Carolina, because you've got history, you've got good food, you've got the beach. As long as it's not like July or August, like I'd prefer to be stranded there like May. That's where I'd want to be.
But fun fact about I love Charleston. Fun fact about Charleston. My brother lives in Charleston, has lived there for several years, and he manages this, I think it's called I can't remember what it's called. It's an oyster bar. And apparently it's very popular down there. So I've had realtors up here ask me, it's like August, and they're asking, I'm going to be down there in Christmas. Can I make a reservation for like 4 people at 8:00 on like December 26th. I'm like, no, I don't have that kind of pull, but apparently it gets really backed up and it's actually a really popular spot. But love Charleston. Folly Beach is amazing. Going back there this year. So that is a great answer. I totally agree with you. So Danielle, thank you so much. It's been a real pleasure having you on, getting to know you a little bit. And I appreciate all the work you do for us as realtors. Data is a huge part of what we do, and you do a great job of explaining that to us. So thank you for joining me today.
Thanks for having me.
That was my conversation with Danielle Hale. Just a couple of observations that I had throughout the course of the interview with Danielle. She was great. Number one, I think that this year was supposed to be a little bit better in terms of sales this year. Everything seems to be kind of being pushed down the road a little bit, whether that is interest rates coming down a little bit or unit sales supposedly being higher this year. It seems like we're kicking the can down the road currently, and we're kind of stuck in this malaise with the housing market. I guess there's both good news and bad news in that. I guess the good news is that buyers are clawing back some of their leverage. It's becoming more of a balanced market in many cases. Danielle talks about seeing more price reductions out there. I'm definitely seeing that. You're seeing more home inspections take place. So that's good news for our buyers. And on the flip side of that, the inventory issue is what it is. And Danielle touches upon how there really is no quick fix to that. It's going to take some time and almost like we need to kind of release that bottleneck, not only of inventory, but those interest rates are tied to our inventory problem because sellers want to move, but they're tied into their interest rates, as we talked about on numerous podcasts this year. We are where we are, and it's going to take a little time to maybe move things forward a little bit. And that's the bottom line, and that's what I took away from today's episode. Well, that's it for the podcast this week. We will be back in another couple of weeks with a new topic, a new guest, and as always, if you want to hear something that we haven't covered yet, please reach out to me, jason.ostrowski@foxroach.com. And if you haven't liked and subscribed to the podcast yet or left us a review, please do so. It helps us to reach more people. Once again, this is Jason Ostrowski saying stay safe out there, stay selling, and we'll catch you on the next episode of the Everything Real Estate Podcast.